All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. We finally saw some post-Fed fireworks yesterday, and maybe the first reaction, negative reaction to the Fed or anything that the Fed has said, published, printed, gestured. The Fed since January, anytime they even whisper, the markets go up. Not yesterday. Not yesterday. And initially they did. In fact, initially Fed statement comes out, market rallies and holds on. Then we had the Fed statement. We talked about it yesterday as it was going on, and talked about this inflation is going to be a big word. Inflation is what everyone's going to be talking about when it comes to the Fed here. And one of the reasons is because the Fed did something really dumb. It's something that the Fed has learned. Every Fed governor has learned. Every Fed governor has seemed to do it, from Janet Yellen to, now Powell to, their predecessors. When they throw a new word at the market, when they throw a new metric, a new term, how does the market react? The market reacts negatively. It creates uncertainty in the market. And yesterday, Jerome Powell did that exact thing. He used the word transient inflation or mean transient of inflation and threw a new term at the market. Now, the term makes a lot of sense. The rationale behind it is very sensical. It's something that, yes, is probably one of the best ways to look at it. But it's new for the markets. It's new, and what does it tell the markets? Right? It says, hey, you know what? The normal metrics for the Fed aren't telling the story that the Fed has been trying to tell the markets now for 3 months. So, you know what? What do they have to resort to? They have to resort to new terms, new metrics to try to support their story. And the market sells it. In fact, market broke the reaction lows, and we talked about the reaction high, reaction low. Market broke the reaction low and whoosh, flush, right? Yeah, now this flush was what, 20 some odd points, right? It wasn't, it wasn't massive. It wasn't even a full percent in the market, but a big one given what the current market volatilities have been. And so we see this action here with the Fed. New term, and the Fed basically saying, look, inflation's not keeping up. Inflation's not keeping up, and if it doesn't keep up, we may have to cut rates, right? And, the market knows if inflation's not keeping up, there's not economic growth. The Fed even went to argue economic growth using GDP, which the Fed rarely does. That's all she wrote there. And there's been a lot of commentary, a lot of talk about it, since. People like, Ella Rain coming out and basically saying, look, the Fed is confused about the economy right now. And if the Fed is confused, then markets are in trouble. We have seen the Fed be confused about the economy once before in my lifetime. Once before. And that was when Ben Bernanke took over in 2007. And it was very clear in the first conferences that he had that there was confusion about the economy. It was clear as day. He then changed the way he spoke, his terminology, how he spoke, how he directed, and he ultimately became one of the most calming presence for the markets that any Fed governor has been. But Powell, kind of gave a little bit of a confused type of message yesterday, and markets reacted negatively to it. Now, we can break down the Fed messaging and all of that all we want, but what it comes down to is how does the market react? And you look and we see, okay, we have the economic data that, we're starting to see the April economic data. We have earnings. Now we have, kind of the Fed coming in here. Fed's kind of done a 180 on their policy. Yeah, okay, the market has to figure out what it wants to do with all this and with the valuations that are out there in the market. And this is the first time we've seen the market really say, hey, you know what? We're not real happy here. There might be trouble in the water here when it comes down to it. Now, one reaction doesn't a pullback make, but we have that setting up here this morning. Now, we did have a productivity number here this morning. U.S. productivity. Let me pull it up. Productivity right here. And, I saw it on every major news outlet that's out there. And it says non-farm productivity, quarter over quarter. They revised the prior down pretty good, right, by 0.6. But the current, that's a big beat. 1.9% to 3.6%. Right? I mean, that's a huge bump. And you say, well, oh, wow, okay, that's good economic data. Why markets should be rallying on that, but you don't see the market jumping on that. Why? Because that's January, February, March data, right? The market is already into April and forward-looking into May data. Right, that is very old data. We saw economic upticks at the end of March, and the question is, can those upticks stay? Can they hold? And so far in the data that we're seeing for April and what we saw yesterday, we're seeing that no, those bounces aren't holding. So the market's not looking at that going, oh wow, okay, you know what, economy, all right, maybe it's turning around. It's kind of just reinforcing what we saw, not giving something new here to the market. So we had that here this morning. We've had some earnings out there. Tesla reported earnings. You'll notice Tesla up and up pretty big. They basically gave the bird to the bears in a way that they have many times over the years. The big bearish argument on Tesla is you're going to run out of funds. You're burning cash. You're going to run out of money. And every time, what happens? Elon Musk says, we'll just raise some money. And he raised $2 billion. And you know what? Elon Musk can raise as much money as he wants because this is a disruptive industry. It is one where money is willing to be poured into. And, he basically did it again, raised the cash, and, they're often continuing to roll here. And the reality is, as Tesla needs to do it over time, they'll continue to do it. And, that's not a valid bearish argument, even though we still see it out there. There are analysts out there this morning talking about the cash burn in Tesla like it's a big deal. And, you know what? For a normal company, sure. But for Tesla, they're pretty immune to cash burn with the amount of funds that they can actually raise out there. We also saw Under Armour earnings, very positive earnings here from Under Armour. Story continues to turn around, continues to be very bullish. We saw some pretty negative price action ahead of the earnings yesterday, but they continue to kind of be on track for some of the turnaround that is expected here from them. It's not a market-moving type of event or anything like that, but a little bit of positive there out of Under Armour. I think you start having to ask the question when it comes to Under Armour: is the turnaround worth the price of the stock now? Right? This is a turnaround story that we talked about. Way back when they really started to turn it back here in 2018, they're trading 15, 16, 17, 18 bucks. They're now up at 24. The valuation's a little bit different. Ultimately, I do think the path of least resistance is higher for Under Armour, but they're definitely not going to be immune to any sort of market pullback that may or may not ultimately happen here. Okay, so anyway, those are some of the things kind of going on here this morning. Normal flat open for the S&P, right? I mean, let's face it, it's it's almost always a flat open relative to the prior day's close, and we see that out there here this morning. Now, I was asked about two stocks, FIVE and STZ. So let's go take a look at these. Here's Five Below. Let me pull it up on a different chart. And full disclosure, I don't follow either of these stocks very closely. I don't monitor them. I don't know the story, in a big way on either of these names. But Five here, this has been a monster run, and we're seeing a lot of stocks like this broke their sevens yesterday. When we see that, path of least resistance tends to be lower in the short run. There's not great stopping points on them for options, but it's definitely something that tends to get a little bit of downside follow through to it. I'm not sure when earnings are here for Five Below. Let me double check. That you don't have to deal with earnings at all, but this is kind of that, just kind of that area of retail that's been on fire, that has just been absolutely white hot here, and nice little pullback. I would expect a couple days out of the pullback, and go from there. But again, I don't know the story. I don't know some of the events that might be coming, but nice little break below the 7 there with it. Now, Constellation Brands, I've followed a little bit more over the years. I've traded this one several times. One thing to know about Constellation Brands, its correlation with the market, it's not a day-by-day type of thing. It's not something where you can say, oh, the market's up today, so STZ is going to be up, or the market's down today, so STZ is going to be down. It just isn't that kind of stock. It's just a little too niche in terms of how it trades and how it moves. If I come down here and just put on price here, let's go correlation instead. We'll take a look at Constellation Brands relative to the S&P, its correlation to the S&P, and you'll notice that ultimately it's correlated, right? When the market's up, STZ is up, but it goes into some negative correlations quite often. And if we back this out to a longer term chart, like a weekly chart, you'll see it spends significant time actually negatively correlated with the market, where market up, STZ down, market down, STZ up. STZ, this has been a nice rip higher. Most of the long-term charts are very bullish when it comes to STZ. And in the short run here, it has a nice little kind of bull flag pattern kind of forming, on it. But there's no trigger to the upside or confirmation to the upside here just yet. And so when that happens, the tendency is just for a little slow bleed down. And if, they get a catalyst, sometimes they'll get a shot day down, where you get that kind of 1 to 2 day, drop back into a retracement zone. So for me, it's one I'd look as path of least resistance is lower, but, not one that I feel too comfortable about if it starts to move against me. You don't have to deal with earnings at all, here with it. Those are already done. So, nice as far as that goes. But this is something where, depending on how you're playing it, if you're playing it on a short-term option basis, it's probably one where you want to just pick a mark and say, hey, you know what, this is my out, and go with it from there. But I wouldn't read too much into yesterday's action to say, well, market fell, STZ didn't. That just that type of element isn't too too predominant when it comes to STZ here. Okay, so anyway, again, I don't trade these aggressively. I don't trade them, too often. I have traded STZ, quite a few times in the past. Not really lately. Five, I've never made a trade on five. That's just not a stock I follow or a story that I follow, and not for any kind of negative reason. Just there's only so many stocks in the market you can follow, and so while I know of five, I'm not very versed at what is happening on a day-to-day or cycle type of a story here with it. If you just kind of look at this head and shoulders pattern here from a technical standpoint, right? First breakout target on this is 17 $17.50. So 140, 150 is its price target on the head and shoulders kind of breakout pattern here. But yeah, I mean, that's not something I'm going to, I would kind of put and say, well, you know what, 150, it definitely has to go. We see things undershoot, quite often. But definitely, you're definitely walking into what has been a very bullish story. So I would expect a small pullback and then some sort of lower high to come in to see a more sustained type of pullback. Even something like this right back here in September would kind of be my expectation there. Okay. All right. So anyway, that's some of the stuff going on out there, in the market this morning. You'll see the indexes, the Qs are up just a little bit. IWM just down fractionally. The SPY up 0.02. Very just kind of muted reaction to things here this morning. Even financials are fairly flat. We saw some sharp selling in gold on the Fed yesterday, and that selling has continued here overnight. Very interested to see where this lands. I've not added anything to my gold position. I still have a lot that I need and want to add, but just haven't had the right opportunity yet to do it. Though we come down to this 200-day moving average, kind of looks like that's going to be the path of least resistance here. We had kind of the breakdown, a little bit of snapback, wasn't able to hold, and then the Fed kind of put a nail in its short-term coffin yesterday. But bottom line, for me to step in and to be a buyer of gold here aggressively, I do want to see the GDX start to outperform gold again. And, we haven't seen that. Since the breakdown, the GDX has been lagging gold. And while that happens, path of least resistance is lower. And when, GDX starts to outperform gold, path of least resistance will be higher. So we're still kind of in that lower phase there with it. We also saw oil. We saw oil sell off a little bit yesterday, but, it held on, but is gapping down sharply here this morning as it pulls on back with a lot of the other commodities that basically was a Fed-induced pullback, but, continued with their pullbacks here overnight. You would think with some of the movement in commodities that there'd be a sharp rise in the U.S. dollar. And yeah, there's a rise in the U.S. dollar. It's not super sharp, but it's very definitive. If you take a look at the UUP, today's action's not marked, but we kind of had this little topping action, started to break on down. Okay, Fed changes that, pushes it on higher, and you get commodities doing a little bit of an about face here, with that action here. Okay. All right, so anyway, that's that's a little bit of what's going on out there. Some of the things kind of setting up out there. I don't have a lot of stuff on the board. I have a little bit of I nibbled on some Bank of America puts yesterday, as I mentioned yesterday. I have some FedEx puts, some BABA calls that they still have. So I haven't been super active involved. I do think Caterpillar is very interesting. I'll be looking at that today, especially since they increased their dividend today, and we're seeing the price action that we're seeing on the stock. That could be a pretty negative element here for it. Also have my eye on Nike, and I didn't want to jump into it yesterday with Under Armour earnings and everything else, but Under Armour jumping nicely. Nike had a very solid breakdown yesterday, and we talked about it. But didn't want to jump in ahead of Under Armour earnings. Under Armour earnings were positive. Are they are they, is that a positive for Nike? I don't think so. Yes, industry wise, okay, there is a little bit of picking up, but Nike's also gaining a little bit more competition here. And is the industry picking up enough to deal with the extra competition? I do think that's a question investors are going to have to wrangle with here as we go forward, and that could be a negative here for Nike and catalyze a little further selling when it comes to Nike, especially when you compare valuations between Nike and Under Armour. Okay. All right. Today I will be I will be back on video at about I'm going to say 12 o'clock, 12 o'clock Eastern. We'll talk about the next indicator in our 30 indicator series. So we'll do that here today, and then I'll jump on a little bit later, take a look at some of the setups and different things that are out there. So that's the plan here for today. Tomorrow we'll, continue the indicator series. We'll also talk about the upcoming 100K challenge in significant depth, and break that down, share some thoughts here with it, answer some questions that have come in here with it, and we'll go forward here from there. Thanks for hopping on. Have yourselves a great one. We'll talk to you later. Take care.